morning, everybody. Um, Today's mobile edition of Clever Conversations finds me on the Metro, 2 minutes outside of Chicago. Today's guest is Marshall Lindsey. Marshall is one of our own here with Regiment Securities, one of our registered reps. But Marshall, how you doing today?
I'm all right. I'm all right. It's great to be here as usual. Always good to talk to you guys.
Always good to talk to you. Thanks for coming on this morning. Um, would love to have you kick off the conversation with just a little background on your entrepreneurial journey, how you find yourself, how you find your way to Regiment Securities and all the stuff that you're doing.
Got it. Got it. So let's see. So the work that both I and actually Andy, who's also on this call, have been doing over almost the last 10 years has been focused on finding investment opportunities in growth markets. And we focused a lot on Africa, but we've also looked at other markets such as South America and Eastern Europe. And a component of that work is a focus on a sensitivity to environmental issues, social issues, governance issues. ESG is people typically refer to it. But I think to a certain degree, that has been a reflection of the development finance institution community, which we've worked alongside in the investment work that we've done. And for them, for those who don't know, development finance institutions are large financial services entities that are usually owned by several member countries, and those member countries provide both paid in and committed capital, and that capital is then managed by that entity in the process of investing in projects, largely infrastructure, but sometimes other financial services entities with the goal of moving the countries in which they invest more so into market-based economies. And fundamental to how they do their work is to have a sensitivity to issues of environmental and social elements when they're doing their investing. And so I think that work had us operating in a largely an advisory capacity, and it made sense for us at some point to get licensed. And then once we decided to get licensed, we needed a place to have those licenses be held, and Regiment was a great opportunity for that. And also, the need for those licenses enabled us to do more of our work was also connected with the fact that Regiment was in the process of expanding its distribution capabilities, which is another thing that was of value to us, since a lot of what we've been trying to do over the last several years was pair United States-based investors with the opportunities that we've seen internationally. And so in that regard, members of the team that we were working with prior to at Sovereign Infrastructure Group ported ourselves over to Regiment. And since then, I think the type of transactions that we've looked to support have broadened. We've incorporated a lot more domestic transactions, in addition to some of the international transactions that we see, still with the same goal of utilizing the buy-side network within Regiment as a means to kind of make a match with the opportunities that we see.
Thank you for that. That's awesome. Emerging this, and I'm just curious: is there like a definition, or like do you have like a buy box, like what you look for and how you determine where you're going to look for an opportunity, like what the criteria or that process of defining and selecting an emerging market that you're going to look to deploy your advisory services and the actual work you're doing, and with it for sure.
Yeah, I mean, uh, I think how we typically look at it is the thought process starts with what is something that is sellable. And so it begins with a market conversation where, all right, well, what is the type of risk that is currently desirable in the market? And then you kind of start to work down from that. So for instance, uh, it's easier to sell rated securities than unrated securities, right? So then you know that if you're looking at an opportunity that has a rating associated with it, the first question is, or well, what is that rating, right? So even though, say, in the case of Africa, if you had to choose between a place to focus for an opportunity, you'd probably look more at Morocco than you would at Ghana, right? Because Morocco is investment grade, depending on which rating agency that you're talking about. Ghana is effectively defaulting, right? Because it's in the C range. Despite the fact that Ghana in general is one of the stronger economies on the continent, you still have to think about it through the mindset of, all right, well, what can I actually sell, right? So, and a lot of the challenge in this space is to manage perception, right? The average, I would say that the average American investor is not familiar with the Ghana Infrastructure Investment Fund, right? And that entity is separate from the government largely, uh, infrastructure investment entity that has the ability to invest in infrastructure in Ghana and take on capital from other entities, relatively well run, well capitalized, but happens to be in Ghana, right? So that entity, if it sat in Tennessee, would probably get more support than what it gets because it's sitting in Ghana. And so there's a perception aspect, there's an information availability aspect that has to be managed. So as we're looking for opportunities, we start at what's sellable, then what's the least hairy. And if it is a little bit hairy, then the question becomes, are there credit enhancement mechanisms that can be incorporated into the transaction structure to get over that hairiness? So for us, we start with, are we looking at something that's going to be immediately scary to an investor? And if the answer to that is no, then it's like, all right, well, what are the other lower level hurdles that we're going to have to clear in order for an investor to be interested? And in that case, we're usually having to incorporate some form of credit enhancement, either cash collateral or an insurance policy. And that insurance policy then has uh, its requirements in terms of it being significantly market based in terms of how it's structured. Another way to talk about it is, I know that there's opportunities in Ukraine right now. I've actually been having conversations with people who are in Ukraine over the last couple of weeks, but I wouldn't bring Ukraine forward to a Wednesday call because my expectation would be people would say, isn't there a war there, right? And if I have to start a conversation with, isn't there a war there, there's a lower likelihood that I'm going to be able to convince an investor of the merits of actually investing there. So a lot of it is what is the narrative that we're bringing forth? What is the information hurdle that we have to clear in order to get somebody interested? And then after those, we may have a pathway to actually being able to successfully explain the merits of the investment.
And is the hope that's super helpful, Marshall? Thank you. Is the hope then to get, let's take the Ghana example, where you're going to do something environmentally or infrastructure build out, and you've got credit enhanced, some sort of credit enhanced insurance wrapper rated um, investment opportunity. Is it the idea that you want to get investors from Ghana to invest in it, or did you bring in $1 trillion into that area?
So I think the the desire to incorporate Ghana domestic dollars is always a great place to start. And we do have relationships as it relates to entities on the continent that do invest. But the one of the aspects of growth market investment, and you'll hear this in several different conversations and about several different sectors, is the goal to incorporate Western market capital into investment opportunities. And so that's always a goal that we're considering. But if we're dealing with the opportunity to integrate Western market investors, then that immediately gets us into this conversation on how do we have to structure the transaction to make it attractive to them. And then that has its own challenges, right? Because it's not like insurance policies are free. And also, I think there's a little bit of sticker shock in the market that I imagine, everybody that, on our team is dealing with to a certain degree, in terms of obligors having an unwillingness to pay what they think is above market prices for their capital. But it's kind of just what it is right now. So if you have to start with the pricing for a particular investment that is already high because it's in the growth market, and then you have to add another 200 to 300 basis points on top of that to cover an insurance policy, you're now getting into relatively expensive levels of risk. And in the Western markets, I think the mindset is still, well, if I can go to sleep at night and make 5%, why should I be lifting a finger to do the due diligence necessary to understand the insurance policy and the underlying, even if it's going to yield me 15%? And then the obligor is going to balk at 15 to 17% on fixed income risk, even in this market, right? Because I think not it hasn't been even it's been about a year and a half of us being in this space. And I think people still kind of feel like there's going to be another shoe to drop, which will translate into some trailing off for pricing that will automatically make things more expensive. But I think that less expensive, but I think that mindset is a little bit misguided, because I think that, when prices drop, they're not going to be significant. So, for us, I think that's part of the reason why we've been focused a little bit more domestically than internationally, because the conversation is not just about what's a good deal. The conversation is about what you can convince somebody of. And
Right.
every Wednesday we're on calls with people who are providing information about seemingly valuable transactions that still have their own challenge getting supported amongst our group, and a lot of those are domestic, right? I mean, I point out like Hecate. Like Hecate is actually a great deal, and it's a great deal for right now, because not only is it a well-run business with a track record, but it's forward-looking because they're in solar, right? But Hecate's, where Hecate is, right, in terms of how it's being supported, which I think is also a commentary on what's the general market response to transactions. So in that regard, I'd love to do more international stuff, but I think also the international markets need a little bit of a wake up themselves in terms of understanding what they need to do in order to attract United States or Western domestic capital, and they're not there yet. And I think that's evidenced
Yeah.
by conversations that I had just last week when the UN meetings were going on.
Yeah, there's probably a lot to unpack there with the UN meetings. I know you're involved with that. And outside of the day-to-day advisory work with the international and domestic stuff you're doing on the securities and, private placement side, can you share a little bit about what you're doing at college? You're a professor.
Yeah, yeah.
Maybe share a
So
little about that and how that helps you with the advisory work you're doing on the security side.
absolutely. So my wife is a violinist, and she's on faculty at NYU, but she's also on faculty at University at Buffalo. And when we were first getting considered for that opportunity, Melissa was like, "Well, if I have to go to Buffalo every week, I want to bring my husband with me." So she kind of sold me into that space. with being an adjunct professor. And so we teach a class together on entrepreneurship and um, and artistic passion pursuit with the goal of diminishing the number of starving artists there are in the world. And so it gives us an opportunity to kind of review fundamental concepts of business with but presented to students, art students in a manner that is palatable to them. So we talk about portfolio management, we talk about the Sharpe ratio, things that are relatively fundamental, but it's presented in a manner where they understand it. And at the very least, it gives me an opportunity to just be practiced in evaluating the mindsets of folks who eventually want to create their own enterprise. And I think that is staying practiced in that is helpful in terms of evaluating the mindset of the people that we interact with on a regular basis, and in the process of trying to understand, what are good opportunities to bring forth. But in addition to that, I've been working with the Blackstone Launchpad Incubator, which is on campus at University of Buffalo, and their goal is to bring forth new ventures that are either student generated or generated by members of the local community, and with the hope of guiding them through the process of commercialization until they get to the point where they're ready for larger amounts of investment, either from VCs or from other incubators. And that's been really helpful in terms of getting an understanding of what is the opportunity space in Buffalo from an investment standpoint. And Buffalo itself is actually, I've kind of gotten to learn that it's almost compact area of significant opportunity in a relatively small family-oriented environment where there's a lot of successful people who are interested in doing more than what they're currently doing. And so it seems to a certain degree like fertile ground that I'm in the process of trying to figure out how to till. So for example, I met the CEO of New Era, the cap company, this past weekend. And he's the third generation CEO of the company. It's been around for 100 years. So, he's now a person that I can interact with the goal of seeing if there's opportunities for us to do business together. But I got that just by being introduced to various people inside this small University at Buffalo group, and he's one of many, right? So people who are running organizations in Buffalo are relatively available to me. And many of them are trying to do stuff for the city and outside of the city, which could likely just translate into more opportunities for regiment. So I'm trying to extract as much opportunity out of that city as I possibly can outside of just what I'm doing with the students.
Yeah, no, that's amazing. I mean, you talk about like the transfer of real life knowledge, like real life experience, and transferring that to the students and just the community in general. And then, as collaborative as you've been, it's been great getting to know you and work with you. But just sharing stories like that, it gets my vibes and juices going because Chicago, we've got 1871, TechNexus, and all these different accelerators, and just Workbox and Workbox Ventures where we office in the city. Like, there's so many different ways that we can collaborate on different things, and just connecting those different areas it's super exciting to me.
Yeah,
Um,
also, I think also along those lines, Buffalo's special because, from a climate change standpoint, it is the people there are relatively sensitive to it. And they're sensitive to it because they just went through two major winter storms last year. And those winter storms were significantly disruptive. But there's also folks that do research in the climate change space who have started to effectively put together a list of cities around the world that are quote unquote climate change havens, like places that as climate starts to shift, will be places that it's easier for humans just to persist. And Buffalo's actually on that list. And which was, I was surprised to hear for as bad as their winters are. But with that being the case, I think it's also fertile ground for conversations on human resiliency as it relates to climate change. And I think that the people there would be interested in you know, pursuing the business opportunities associated with that. In that regard, I had a conversation with some guys at Vistria, uh, uh, you know, um, uh, Marty Nesbitt's firm, and we were talking about what is the process of them managing issues of climate change in their underlying portfolio. And what they said is that they're largely just just counting carbon, which is I think what a lot of people are doing. But I was pointing out the opportunity for investing in new ventures that are focused specifically on human resiliency, because I think that that is, as much as the concept of climate change, I think is misrepresented in the human dialogue. I think there's a lot of opportunity that's also associated with it, because the persistence of humans is an investment opportunity. So I tend to believe that the next Rothschilds, Rockefellers, and Carnegies are going to be ones that are made in the human resiliency space, because those are largely going to be infrastructure investment conversations, to help people just deal with being on Earth as Earth changes. And then also that also includes insurance opportunities. So in that conversation with Visrio, I mean, we talked about, well, what's a portfolio of new ventures that are focused on issues that support human resiliency that could be put into a portfolio and sold to them. And I was like, yo, let me go out and see if I can find that, because I'm sure they exist. But the the interaction with Buffalo makes that a little bit less of a lift, because since there's so much new venture activity in Buffalo, I've already talked to people there and said, hey, send me the stuff that is specifically related to this kind of investment focus, and let's see if we can put a portfolio together to put in front of venture capital firms, and maybe be presented with the opportunity to chase that down for a fee, for co-investment, for whatever, right? So that's how I'm thinking through this climate change issue, and in a certain degree, it's representative of just what's my knowledge in the space in general, because I've been looking at it for 20 years, because it was the focus of my doctorate. So this, like everything that's happening right now in the world, is surprising to some, and I'm expecting it. But I'm already thinking about, like, well, what do we do to protect ourselves and make money in the process of us responding to it?
Yeah. How much in your you know purview of going over the investment world, both international and domestic, how much does space come up? Because what you're talking about, like resiliency and the natural shift of humans trying to solve problems, does space pop up at all? Like going to the
Yeah.
moon or Mars?
It comes up less in the context of human relocation, and it comes up more in the context of what is the market for space service actually look like, right? So they're looking, like, there's a company that operates out of New York and out of Botswana that is all about pushing forth just outside of the stratosphere technologies for various services. And so they're effectively like their own incubator, but they're talking about, like, what is the just outside of space market as it relates to servicing space stations, or dealing with debris, or any of the other issues that are a near level space consideration. There's been less conversation about what relocation looks like. And I think that's for a reason. I think for people that understand physics and astronomy enough, understand that's a non-trivial undertaking to actually relocate humans to another planet for an extended period of time. And there's so many different issues from a physics standpoint that we haven't even begun to deal with, like relativity, and how do you deal with space radiation, and all these different issues. So I mean, like, it's still a non-trivial undertaking, but trying to figure out how to deal with the market need that's just outside of the Earth's atmosphere, I think that's a viable consideration. And actually, Bennett had two questions, and he said, what is the common thread between investing in communities in Africa and investing in the academic community in Buffalo? Have any of your students incorporated the business principles you teach into their art? The second one is easy. I'm not sure yet, but I need to circle back with them and see if that is the case. For the first one, I think the common thread is that whether you're talking about Africa or you're talking about Buffalo, trying to convince an investor of an opportunity seems just as hard to me. If you're talking about just trying to get them to look at something that's outside of the usual spaces of intention, like real estate and large corporates. So as soon as you start to move out of real estate and large corporates into anything else, it starts to become a challenge in just terms of trying to convince people of the merits of an investment. And I think I think if you're talking about Buffalo and Africa, the deviation may be just because of the credit considerations of the location. But in terms of trying to convince an investor of the merit of an investment, I think that's equally as challenging, regardless of whether or not it's in Africa or Ghana, depending on what the type of investment you're talking about.
Awesome. Thanks for fielding the question, Benitez. And I think we're butting up on time here.
Yep.
Any parting thought or gold nugget you want to leave the audience with?
Yeah. So I guess in the last 3 minutes, I know we first started this conversation when it was presented to the group as something that has to do with climate change, which is kind of like, where I'm focused. And what I'd like people to think through, or not think through, but to consider is that the general conversation on climate change is often presented as being a political one. And I don't think it necessarily is that. I just think it's a relatively lazy way to talk about what's happening on the planet and what's coming forth and how we need to prepare ourselves for it, depending on where we're oriented from a risk standpoint. And to me, all climate change does is make the requirements for risk analysis and due diligence potentially more of a life cycle assessment consideration than what it is right now. It's important to have a deeper understanding of stakeholders and in your value chain in your investments, especially if your risk has you exposed over 10 years. Because in the next 10 to 15 years, I think we're going to start to see some changes in the world that are going to have some non-trivial impacts on capital markets. And so to prepare us for that, I think we need to be a little bit more deep thinkers as it relates to how risk can manifest, how individual events in one market can cascade to others, and start paying attention to things in the market that are indicators, like what is the insurance market doing? And where the insurance market goes, we should be paying a significant amount of attention, because they're going to be, the canary in a coal mine as it relates to asset protection over the course of the next 10 to 15 years. And I'll stop at that.
That's helpful. Thank you so much. And thanks for coming on this morning, Marshall, and sharing some ideas. And thanks for all you do at Regiment Securities and in the community in Buffalo. And it was great having you on. We'll talk to you soon. Thank you.
My pleasure. Thank you.